Some of the top miners are Russian. What companies and metals could be impacted as sanctions start rolling out? With us to discuss is Joe Mazumdar. He's editor and analyst of Exploration Insights. Joe, welcome back to Kitco.
Thanks for having me, Michael.
What's Russia's biggest footprint on the resource space, Joe?
Well, when we talk about commodities, obviously the energy sector takes, the big front stage with natural gas and oil. But in terms of the commodities we look at, the biggest impact would be palladium. Russia contributes about 35% of the production there from the Norilsk operations. You've got potash, coal, a bit of platinum. So that would be the big commodities that we look at that would be negatively impacted with respect to supply, but positively impacted with respect to price.
What are some of the top miners outside of Russia with operations in the country, Joe?
Well, if we revert to the ones that are actually operating in the company that are Russian, those ones that are listed in London, like Norilsk, like the one I just talked about that produces a lot of palladium, nickel, and copper, they're down about 40%. Polyus, another local Russian operator, is down 20%. Kinross, which has operations in Siberia, who actually added, I believe, to their portfolio there as well. They're only down 3%, and that might be mitigated a touch by their growth asset that they acquired. Great Bear is in Canada, so that might have diluted it a bit. But yeah, I would say in terms of the gold companies, that one's probably the one that's most exposed. But I would say any company that operates in any country that has links to Russia might be impacted.
If sanctions fall hard, Joe, what could you see as some potential impacts on the mining space?
Well, I would say, if countries are going to, be impacted by palladium or potash in that, then they're going to have to look for new sources of those commodities. And in today's environment, that's not easy to get from nowhere, as well as then you add all the supply chains and rejigging all of that. So that's not going to be easy in this current environment. So I could see a spike in prices in those commodities that Russia is a big player in.
On another topic, we had year ends. Let's start with gold miners first. Did anything stick out to you with the Barrick year end, Joe?
Yeah, lots did. Like at the headline numbers looked interesting. They met their production guidance. They replaced reserves, and on a positive note, they replaced the reserves at a higher grade. But again, most of this is brownfield exploration, not grassroots exploration that they're doing. So that means just around their current operations. So what you do see is that I think Barrick was touted as being one of the companies that was making a bid on Great Bear, but didn't want to pay the premium that Kinross did. So they're basically plowing their cash flow back into dividends, which they're increasing by 11%. And then they've put out a share buyback program of about $1 billion that they'll be putting into place. But if we look at how it's going, like financially for them, like the gold price that they realized from 2021 to 2020 has basically not changed. It's around 1790, sorry. So in that flat gold price environment, they generated 40% less free cash flow in 2021. And the main reasons seem to be that they had 7% less production, they had higher costs like we're seeing in most of the industry, but also they're spending more on capital. I think they had about $300 million more in capital. So all that impacted their free cash flow. But growth, the keys out of that is growth is problematic. They're focused on free cash flow, focused on giving back to shareholders, and and it looks like the margins are truly being compressed.
It's a pretty good year to be a base metal miner, especially if you have exposure to copper or coal. I think of that monster year end that Teck just announced.
Yeah, I would say copper was good. Copper prices were up 50% year on year for what they realized. But the main draw there was the coal prices being up about 85% year on year, and their bitumen prices. Like if you look at their revenue, it's up 50% year on year, and the gross profit is up almost 280% year on year. And that's mostly driven by coal, because coal is about 46% of the revenue this year and was less than 40% the year before. So coal had a really big impact on Teck's top and bottom line.
Joe, we always love talking to you about financials because you really use it as a model for understanding what is happening in the resource sector. How would you advise other resource and sectors to look at financials?
Well, I guess it would depend on what you're looking at with the level of the company. If it's non-cash flowing, you focus more on what they're spending their money on. So look at the income statement. What do they spend on G&A? And in terms of exploration expenditures, some companies put it as an item in their income statement, but others put it in the cash flow statement under investing activity. So those are two spots you can look at to see what they're actually spending their money. And then the other big thing, because they're non-cash flowing, is look at the working capital. Now, working capital is not something that's a GAAP measure, like a generally accepted accounting principle measure, but you just take their current assets minus their current liabilities, and that gives you an idea what they have, what their obligations are over the next 12 months. And that number could be negative. And if that number is negative or very low, you know that they're going to be raising money in the 6 months. So if you have interest in the company, you might want to hold back and wait for them to raise. In terms of big companies, then it's similar to what we just talked about with Barrick. Like, headline numbers look impressive, and that's what the company tries to promote. But when you dig into the financial statement, you can see, what's changing with respect to, are they making more money or actually less money? And where are they making or losing money? And how are they acting with the money that they have? Dividends, buybacks suggest that growth is problematic for a company like Barrick. And they're trying to gain interest in those shareholders that look for things like, accretion dilution, such that they're lowering their amount of shares, and also in terms of dividends. So there's lots to look for. And what's nice about it is that when they formulate their financial statements, they have to be, at the same level, and it's something that you can compare company to company.
But bottom line, what's the money that's coming in, and what buckets are they putting the money in? Because that's going to tell you a lot about the strategy of the company.
Yes, but also, like, when you look at what they're making their money on, and see which items are one time only and which items might be continuing longer. So I remember several years ago, there was a company, I believe it was Eldorado. I mean, they had a huge free cash flow surplus, but that free cash flow surplus was actually from them selling, I think, their assets in China. Like, that looks nice, but that's only a one-time event. So you want to peel that back and look at what the actual operations they have are doing. So looking at those numbers, you still have to dig in to see how those numbers are generated.
Joe, thanks for speaking with Kitco.
Okay, thanks very much, Michael.
He is Joe Mazumdar. He is editor and analyst at Exploration Insights. My name is Michael McRae, and you're watching Kitco Mining.